All right, happy Tuesday. Happy first day of July. Happy first day of the next half of the year, right? This is the Cow Guy Close. I'm Scott Schulte, otherwise known as the Cow Guy. Thanks for joining us. Got another great show. I'm excited. Let's start with this, right? We had all-time record highs on the last day of the month and quarter. That's a stark change from where we were in April, if you remember. There's a few reasons that's been happening. It's looking more and more like we may get at least one, maybe two rate cuts between now and the end of the year. And we've all watched today while our senators wrestled with that big, beautiful bill, and they're sending it back down to the House. So that looks like that passed the Senate. And then what else do we have? We've got July 9th deadline with some of these trade deals, right? So these are all market positive issues. But are they the fuel that's going to be needed to get us to the next level higher, another leg higher? They are already known. So I say that maybe not the fuel that some think it might be. They're out there already. People have known about them. So the market's going to take some relief with those rate cuts and trade deals and the bill being passed. But is it really going to be the rocket fuel that we need to take that other leg higher? I don't know. So my next guest, he looks at all these things. We're going to talk to him about that. Let's bring him on, Mr. Luke Lloyd from the Lloyd Financial Group. Luke, thanks for coming on. You know, I'm not trying to be a Debbie Downer. It's just one of those things where I was talking to somebody during my radio show this morning, and he said he wouldn't be surprised if a lot of these things happen and we sold off a little bit. And I had a hard time arguing with that. What say you?
Yeah, I agree, because this is a bigger, again, macro, bigger level thing at play here. And you know, the news articles you read or whatever you're looking at that's talking about the big, beautiful bill will say this is a $3.3 trillion big, beautiful bill, but that's a misled headline. This is not a $3.3 trillion big, beautiful bill. What they're factoring is the deficits that could come from this, right? The $3.3 trillion added to our deficits over the next few years because of this big, beautiful bill, with maybe some tax cuts in there, maybe some of the Medicare, defunding some parts of Medicare, the things that they're talking about, which is not defunding Medicare. Let's get that exactly right. There's just some parts that are changing within this big, beautiful bill. But the biggest thing here that, people need to realize, and the reason why the investors in markets might actually not like something like this, is because it does raise the debt ceiling $5 trillion. I think that's the biggest rise and raise in the debt ceiling ever in the history of the United States. And the most interesting part of that is that these are Republicans, the Republican Senate, the Republican Congress, the Republican executive branch raising the debt ceiling by $5 trillion. So the markets right now are no longer at the point where, I don't think they're at the point where stimulus is a good thing. Historically, stimulus in the markets, anytime you print money, anytime you deficit spend and pump it in the economy, it provides liquidity. I think the markets are truly now concerned about the risk on our debt, whether it comes to interest rates, and also the risk that the economy and the United States, if they continue down this path, is going to be in a horrible spot 5, 10, 15 years down the road. So I think, yes, it's negative for the market because the investors are starting to realize it's no longer pump money in the system and play good.
Yeah, you're right on that one. And I try to cover, here's the dilemma I have. I try to cover it on the show, right? But you know what? Just like nobody in Washington, it's hard for people to get their head around the fact that these big numbers and how much we are in debt, and the red mist comes down and nobody really wants to know. It's like they don't want to hear about it. But the problem is we're going to, at some point in time, and I think we've already seen it happen a little bit with our 10-year yield. That yield slowly but surely starts to move higher when we start to need more money, because the market knows that we're having to borrow so much cash against the interest that we're paying on the debt, and nobody wants to buy the bonds. So if there's no buyers for the bonds, these yields have to go up to attract buyers for the bonds, and that's a problem. And you're starting to see stuff like that happen more than I've seen it ever before.
Well, that's why you have to pay close attention to these treasury auctions. If these treasury auctions don't go well in the next year or 2 years, and you're starting to see a lot of people not buying our bonds, specifically other countries not buying our bonds. I think like 30 or 40% of international countries own American bonds. That's a risk to the upside when it comes to yields. Now, the question is a deteriorating economy, is geopolitical events, whatever it be, going to maybe cool or tame some of those interest rates on the same side of the spectrum to kind of balance things out? That's a question we need to kind of think about. But what's interesting from a stock standpoint, investment standpoint, is all the money that is being spent in this big, beautiful bill, whether it's border security and infrastructure. I think $10 billion roughly in infrastructure spending. So utilities, walls, fences around the border, those kind of things, materials. You can look at some of those stocks. Personal enforcement, ICE agents, Border Patrol, maybe something like Axon, which is like the security cameras that all these police officers have on them. These are stocks you can think about and sectors you can think about owning when it comes to these kind of events where, again, we don't live in a capitalistic system when the government's dictating the free markets and buying things, but it helps these specific companies out. And these are certain things you should think about when you're positioning your portfolio.
Yeah, you bring up something we talked about yesterday. Maybe you can talk about this as well. But, the significance of 5% of the GDP being pledged by NATO members to spend towards, defense. I went right to defense stocks on that. I mean, think about the capital that's going to be attracted. I mean, what do you think about that?
You just hit the nail on the head on my next point that I actually wanted to bring up. So I'm glad that we're flowing and we're thinking the same way, because I think there is an extra like $150 billion in this big, beautiful bill going to defense contracts. And the bigger one at play, again, is the NATO referring to 5% of the GDP being spent on defense. It's usually been historically America that's taking care of everybody, and we're the ones spending more dollars and percentages on defense than any other country. If other countries come into play here and they're spending more money on defense, whether it's their government spending or their own private entities, whatever it be, helping with the defense, it's going to help these defense contractors up. So Lockheed Martin is one that my clients own specifically because you can own the Raytheons, you can own other GD, General Dynamics, you can own these sectors as a whole through an ETF. But the reason why we own Lockheed Martin is for a couple of reasons. One, they add more dollars of profitability per dollar of revenue they bring on, a little bit better balance sheet than some of the other defense stocks. And also the F-35, every time I turn on my social media, I feel like I've seen F-35 jet. Honestly, if I had to do it over again, I think I would join the Air Force and like seriously consider being a pilot. Those F-35s look insane and awesome. Watching Top Gun with, was it Tom Cruise, or was it Tom Cruise?
Yeah, that's right. Yeah, you're right.
Yeah, Tom Cruise. Yeah, Top Gun. It brings me back to the day of, when America was America, right?
Well, and that flows into the last thing. We didn't say we'd talk about this one, but I think it's 6 out of 10, or it's a decent number of Americans for the first time in a while are actually proud of their country. And we've given them a bunch of reasons to be proud of it, I think, as of late. What do you think?
Yeah, I think so. I think there's a lot of reasons to be proud recently. I think there's also a lot of concerns that we do. Elon Musk brings this up in his tweet. And you know me, my kind of politics, kind of the way I think, me being a little bit more libertarian than the current Republican Party is. I mean, we do have to consider that the Republican Party is contributing to the same problems in a lot of ways to the Democratic Party with their fiscal irresponsibility. So yeah, there's a lot of things to be excited about, but is anything majorly going to change in the long term? I don't know. Is America too far gone to get America back to what it was meant to be, with true free market capitalism, with true, get off my lawn, government, get out of my business? I don't know if we're too far gone. If I had to bet, I'd say yes, we are probably a little too far gone. Hopefully America hits the reset button one day or another.
Well, I mean, if it's a difficult thing, and I think you're right, it is, I think there's just one person for that job, though. So I think we have him in office. I mean, if there's anybody that's going to be able to turn it around, it's going to be him, hopefully.
I hope so, man. I hope so.
All right. Great having you on. Thank you very much, Luke. Luke Lloyd coming to us from the Lloyd Financial Group in Covington, Kentucky.